The Hedgeless Horseman here. It's July 6th, 2022. Today the dollar is ramping and bond yields are actually going up, so that's weighing quite heavily on, well, pretty much everything's down. And yeah, I mean, the dollar has been on a real tear. And the funny thing is, like, we can look at what's happening now, of course, and make judgments that, hey, the dollar is making everything go down. That's a big thing. And I see people talk about inflation. I mean, that's basically what we're trying to tackle with this this tightening cycle, which is one reason why I think the dollar is going up. And maybe, who knows, maybe it will actually hit this area, or maybe this is a big reverse head and shoulders pattern and it will actually go even higher. This would be about 110, 111 on the DXY, the dollar index. And again, it's like easy to rationalize why miners are low. Input costs are going up. In many mining jurisdictions, you see mines go on care and maintenance, etc. And that's one way to justify why juniors are selling off. But the funny thing about that, I find, is that the juniors who are exploring for stuff, I mean, they don't have huge energy costs. I mean, they're not operating anything. They're operating a drill rig. So yes, I assume that costs for assets, etc., are up as well a bit. But it's like relative to what some of these successful juniors are drilling, etc. I mean, if you drill out and prove up 300,000 ounces, for example, of quite high quality gold, I mean, that's nothing relative to your drilling costs went up from 4 million to 5 million. From a dilutional standpoint, that's of course a problem. But they, let's say, drilled up 500 or 300,000 ounces. I mean, the in situ value of that and the economic value of that, that's could be tens to hundreds of millions. So when you really think about it, doesn't make much sense. And at the same time, if mines shut down, etc., that's just constricts supply. And more importantly, these juniors, their projects that they're drilling or proving up, de-risking, advancing, I mean, most of them won't be in operation for like 5 to 10 years, if ever. And what's even more fun is that large cap miners, they're not close to the 2015-16 lows, I would assume. It's like, okay, let's look at Barrick Gold. And these, again, the producers are the one who are actually suffering the inflation. So okay, yes, is this low? Is GDX and GDX J low? Yes, but it's like nowhere near this level, nowhere near this level. And I mean, Newmont might be an even better example. Again, these are the largest gold producers. These are the ones that get directly hit by high costs of labor and of energy, etc. Newmont is off from making a new all-time high, which previous all-time high was set in 1987. I mean, and then you compare it to the juniors; they're pretty much down here. So, in my opinion, that's like people try to rationalize everything. That, well, again, you see price go down, and then the news follows the price. You can see that in a stock, in a blue chip stock. Let's say a company comes out with a report or annual results, whatever. It's like the stock opens up, and then you hear, some guy on the news say, well, the stocks of yada yada went up because of XY. said, and then it closes down, and then the narrative changes. Well, the stock, stock X went down because margins in one of their segments got, shrunk, let's say. So it's like price movements dictates the news pretty much. I guess that's what I'm saying. So it's like you can rationalize it all day why juniors are near, bear market bottom levels. Inflation is up, yada yada yada. But truth of the matter, that's like there's simply nobody wants to buy. I mean that's it pretty much. Because again, if inflation was so impactful, let's say, I mean all these actual producers who actually get hit by inflation in real time, I mean they would be selling in that case near bear market bottoms. They don't. I mean the sector is not that crap, at least not yet. But more importantly, the juniors are already pricing in close to Armageddon. And of course they can go lower. I mean, anytime sentiment is bad and there's even more downside in the metals, of course you're gonna see it sell off. I mean that's just how people work, because people are again looking for excuses and to justify their selling because they don't feel like buying. They get scared, and then the words get around that inflation is on the move up and has been for a while. Yeah, but the juniors didn't even reflect the price of gold before this inflation hit. So you can't have it both ways. Like, okay, well, does inflation matter all of a sudden for the juniors, but it didn't matter when there was no inflation? You can't reconcile that really. So it's like, in my opinion, this is just sentiment. This is just what markets do, and it's like I have no idea how the marginal investor thinks. Well, I hope not, at least. Well, I mean, it's good to know what your competition thinks, I guess. But it's like, again, vast majority of people will never beat an index. So if you see a lot of opinions being thrown around, it's like everybody wants to justify the when they sell low. Same thing, everybody is gonna justify why they're buying high. X is happening today or has happened, so I'm just projecting, same weather tomorrow as it was today. But it's like, what comes after this? Okay, let's say inflation stays at this pace or even increases, whatever. If you look around, I mean, economies are going to crap. I mean, Europe is having big problems. One reason why is the dollar going up so much. I mean, because there's chaos in the world. So as things get worse, progressively worse and worse, that just gets closer to something breaking for real, or the policy response, for example. So it's like, I'm not looking at what gold or any company I own, what today looks like. It's what today looks like relative to whatever's gonna happen in the future, let's say. I mean, gold, for example, in 2015, it bottomed on basically the same day as Fed started to hike rates. So what's gonna happen if this shit show we're seeing out in the world continues? How does policymaker get votes? By doing something, often trying to fix a problem they themselves created. So okay, so what's gonna happen? I mean, look around the corner. Is every policymaker just gonna let the world economy disintegrate without doing anything? I mean, how are they gonna get any votes from that? No, so something's gonna change. The longer something gets worse, the more it gets closer to some monumental shift. And if you're a junior investor, you're already basically right now you're buying at rock bottom prices, and sure they can go lower. Of course, anything can go lower. This is strategic metals. Like we saw in the global financial crisis. I mean, we're around here now if we're using this as a sentiment proxy. So we're at flash crash bottom. The bear market bottoms actually took it down a bit more. global financial crisis saw it actually, juniors puked. Let's say we're at this level now. They actually puked for 1-2 months more. But then they went on especially this stock. I mean, I'm assuming they potentially made a discovery, but this is what euphoria looks like. And when did euphoria come? It came within, let's say, 1-2 years after absolute destruction was in the junior space. So again, it's like, why are you focusing on what's happening now or what has happened in the past? I mean, anytime something gets extremely cheap, it tends to become the opposite in due time. You've seen it every time before. Here it was absolutely, I mean, from my understanding, I wasn't actually in this sector. I mean, I thought the sentiment was high in 2016 in the junior space. When I talk to people who experienced the sentiment top of 2011, I mean, that blew away this sentiment top by a mile. And I mean, this chart suggests that for strategic metals as well. So you go from absolutely depressed, extreme sentiment valuations. Then these juniors go on, who knows, 1,000% rise to an extreme sentiment high. And then we have the worst bear market bottom ever. So you go from absolute extreme to the worst bear market extreme ever. And then you have a pretty solid jump here. Many juniors up 500-600%. So who cares where we've been? We're here now. Where are we going? Where are we going within the next 2 years? If you just look at this chart from 2007, for example, anytime this stock hit this level, well, except I guess here, it actually took 2014. That was 2 years. Okay, let's say within 2 years from this level, you were every time sitting on a multi-bagger. Every time so far. So that's like 1 time, 2 times, 3 times, 4 times. This I guess is gonna be 5th time because I think you're gonna. This is not much higher than here. So it's like, I mean, again, it's not rocket science. It's just that everybody, 95% of people, lose in this market. So if you only looked at this chart, it would be impossible not to know when to buy. And pretty much, close to, at least in the ballpark of when you would be selling. So it is blatantly obvious. But it's we who mess up things. It's we as investors. It's over 95% make the wrong decisions. But I bet your ass, that if you ask someone who found this sector, had no idea how the sentiment was, had no idea about Twitter or what everybody was scared of or whatever, if he saw this short, it's like, would you be a buyer or a seller here? It's like, well, it's pretty obvious you would be a buyer, right? Yes. But the longer this goes on, or the deeper this goes on, we're gonna trick ourselves. We're gonna justify selling out, because I mean, most of the time it's because you get scared. I mean, what are people scared of right now? I have pretty much not seen anyone over the last several months say that they are afraid of overpaying for anything, that they bought a junior, let's say, and they thought, hey, I'm not sure, I think I actually overpaid for this, I think I overpaid for the ounces in the ground, etc. No, everyone is scared of share price action, that price can go lower. And newsflash, that's always the case. You will never find a scenario where price cannot go lower. So that shouldn't, I mean, when you think about it, that shouldn't, if that's your reason for selling, you're never gonna buy. And if you've seen a downtrending action for 2 years, what's history teaching you? That it can go down, and it has gone down. So you're gonna be more inclined, fool me once, shame on me. Shame on you, fool me twice, shame on me. So everybody's conditioned that junior miners can only go down. And now the main fear is that it will continue to do so. And that's going to just increase the lower it goes or the longer it stays down here. People are going to just be obsessed about the fact that what they own can go down. And again, that's an irrational thing to focus on, especially if you're a value investor, because that shouldn't really, that's not, I mean, take Warren Buffett, for example. He buys when something is cheap. And then he just waits, and if it becomes expensive, he'll sell, if he even can sell. He's not trying to bottom tick everything. I would be surprised if he bottom ticked a lot of stocks. But he's doing quite well. He has like 80 billion or so. So it's like, again, it's abundantly clear from a value standpoint. Juniors are generationally cheap relative to the gold business and the gold price. But still we find every excuse we can why you should sell, because it can always go lower. And that's why, again, almost everyone ends up making bad decisions. Because if you had no emotions and was just looking at this, had no idea what this was, it would be abundantly clear, like, well, this kind of buying environment comes like, you know, a few times per decade, let's say. So you could wait a long time to be able to buy this cheap, and still when it happens, nobody does it. That's just how it is. And it's like, I like, thinking like this. I mean, we've seen, or many people have seen, Bill Gates has been hoarding and buying up farmland. Okay, that's a real asset, obviously. The world needs food, so that makes kind of perfect sense. What do? I see it as I'm buying up and hoarding as much minerals and as much mineral land, and prime mineral land, for pennies on the dollar. Because what's going to happen? Some of these mines, some of the projects that the juniors have, has to come into production, because we're not finding enough minerals and we're consuming a bunch of minerals more every year. So if theoretically, if you owned all the mineral rights in the world, every country at some point would need to go to you to actually get more supply, because every other mine at some point in time would have run out. So I see it like that. I'm just hoarding and buying up prime mineral land for pennies on the dollar. I'm just buying all the future supply, because we know future supply will be needed, regardless of what the dollar does now. Regardless what the metal prices are doing today, we need more metals, and I'm buying up as much as I can. Let's look at some news. Nevada King demonstrates average gold cyanide solubility of 86.7% in initial testing at Atlanta gold mine Bell Mountain Trend. Nevada King has, I think, a market cap around 97 million, has 25 million in cash, and they are a land hoarder, pretty much. They own huge amounts of land in the Cortez Battle Mountain Trend in Nevada. So prime jurisdiction, they own a massive amount of it, and they have a project that underpins the value, in my opinion. That's the Atlanta gold mine, where they've hit great results, like 60 meters of 5 grams per ton and stuff like that. And now it appears, because as far as I understand, there have been question marks about the metallurgical qualities of the Atlanta gold mine. That used to be a producing mine. Now it appears that, from my understanding, these results are even better than I think the management team expected. These are not we don't know what the definitive results or metallurgical recoveries will be in a full-blown mining operation, but these are very encouraging results, meaning that ounces in the ground here appear to potentially be highly economical, especially at the grades they've been finding. So that's a massive de-risking thing. I mean, if the metallurgy would be crap, those ounces could be worthless. Now it appears that they surprised to the upside in terms of potential recoveries. Great thing. I mean, again, it's like I don't think Nevada King is expensive if they only had the Atlanta gold mine, because that's valued at like 50 million Canadian or something right now. That's not much. I mean, if they have a pretty high grade open pit, etc., and they are gonna drill a lot at Atlanta, and they have again many other projects they will be drilling as well. 25 million in the bank. If you're worried about the capital markets, etc., I mean, see the CEO Colin Kettel, he recently put in 5 million at higher prices without a warrant. So that's insider buying for 5 million basically at higher prices. So it's like, yeah, is that high risk? I mean, I think right now, junior like Nevada King probably should have a higher uh, credit rating than many countries around the world. So okay, you buy, let's say you pay 100 million, you get 25 million in cash via the company, and you get 75 million that should reflect all the gold they have and all potential gold they can find. I mean, that's a good deal to me. They're not anywhere close to going. They won't go bankrupt anytime soon. Even if they, kept on drilling and drilling. So you have like, I don't know, 1-2 years before they might need to raise. And in that case, it's like, do I think the sentiment will have changed in the next 1 to 2 years? Yeah, I think so. Plus, if they spend money, because that's the only reason why they would need to raise money, if they drill a bunch of holes, are they gonna find less or more gold? I'm betting on more gold. So whenever the sentiment changes, they're probably gonna have a lot more gold on the books as well. So you're gonna get higher beta on that. That's good risk reward in my opinion. Solis Minerals withdraws from Matt Mostasal option agreement. This is unfortunate. It was a very cheap junior that was going after a copper porphyry depth, and they had a option payment of, I think, yeah, by spending 5 million exploration, making payments of US 5 million. So that's quite an investment, especially for a junior right now. So they instead decided not to go ahead with it, so they won't need to spend this money. So now they have, I think, around I think it says, maybe I'm just missing it. I think it says that they have around, yeah, 3 million Australian dollars in cash. I think the market cap's around 4 million. They have more projects, but it's like, okay, they have pretty much an enterprise value right now, $1 million. Of course, that's because the stock has gone down, etc. But it's like, yeah, if they sit on their hands, you're paying 1 million for anything they have, pretty much. Am I loading the boat? No, I'm not. I prefer probable growth as per usual. But it's like, is that expensive? No, you get, if you buy a share, for every dollar you pay, you get 75 cents in cash, and then you get, the copper potential in their other projects. That's just a sign of the times, just how cheap it is. So every other project they have is reflected by 1 million in a market value by Mr. Market. Is that expensive or cheap? I would say that's crazy cheap. So I think again, when we swing, you won't see valuations like this when we're up here again. Not in any miner, not even in the crappiest junior around. So it's a buffet out there. That's why I like diversification right now, because there's so many companies that when we hit the next sentiment high, they're gonna be up a lot, and I want to make sure to be a part of the next wave up. So I don't want to bet everything on one company. Let's say they have one project, they have one project to drill, they miss, so you end up with no gold, no prospects for gold or copper or whatever, and we hit a sentiment high. So you have a huge beta, but you have 0 ounces to have beta on. Western Alaska, one of my larger positions, they are currently drilling. hit up to 18.5 meters of massive sulfides in TVO horizons. In TVO horizons. No, yeah, two TVO. I thought it was when I read it first. This looked almost like a zero, whatever, like it was a name of a drill hole in two horizons encountered. So okay, they actually estimate true thickness as well, pretty close to actual drill widths. Massive sulfide, massive sulfide, massive sulfide, internal Gossan, and you can see the pictures here. And from the people I've talked to, this looks really good. This looks similar to the high grade stuff they have already been hitting last season. So do I expect some high grade numbers out of some of these holes? For sure. They will do a paced expansion drilling program. I think they mention 25 meters step outs. Yeah, I mean, this is previous hole, 9.1 meters true thickness, grading 526 grams per ton AG, and a combined lead and zinc. Oh, yeah, I mean 36%. That's pretty high grade. Okay, forms a rod. Yeah, drill spacing has been tightened to 25-meter grid. So they're basically, methodically expanding, trying to expand the footprint because there's not, mineralization is not everywhere. They're following well, I guess a structure where the CRD came up and then spread out more horizontally. So methodical drilling, I like it. I mean, not obscene step outs yet at least. So they will just continue to grow. And again, given this, do I think they will have more inferred, a bigger inferred metal endowment on their project after this drill season? Yes, I think so. So there's going to be more beta. There's going to be more value. I like it. I mean, it appears they're pretty much hitting what they hope to be hitting. Novo came out with a gold production update. A bunch of stuff. They haven't. I mean, we don't see the actual economics. I'm assuming because I'm hearing that again inflation is really ramping in Western Australia, and I remember the day after Novo put Beadons Creek on care and maintenance, there was another junior that mothballed their operation as well. So this is not company specific really what's going on down there in Western Australia, and that's one reason I think Australia loosened up. You don't require a COVID pass to enter Australia anymore, starting from today, I think. And I think they even mentioned that this will open up the labor market, etc. Because that kind of again tells you something about policies. Like give the citizens enough pain, and the policymakers will be forced to do something. I actually thought that Australia would be one of the last countries to actually open up for anyone, pretty much. But no, they have such high cost inflation and labor inflation, and Australia has a lot of metals, so they produce and export a lot of metals. So when their margins are taking a hit, I mean that's just a lot of tax revenues that go out the door. So policymakers did a change. So I'm expecting that okay, this will at least alleviate some of the inflation pressure because now they can bring in skilled labor from any other country basically. So again, on the point of like thinking what comes next. Yes, everything is turning to shit right now. So what's that gonna lead to? What's the policymakers gonna do? Because like we saw in 2008, 2009, I mean, the same goes for the juniors. We had the global financial crisis, which took everything down, including gold, paper gold. I mean, this is paper gold. What happened then? I mean, when that bottom, it went on an absolute tear for 3 years. So this is everything turning to shit. Everybody is scared, and everybody selling down here was selling because they thought it would go like this. Okay, it didn't go like this. One day gold bottom, and then it ramped higher. So where are we now? I don't know, but this looks, kinda similar. Like we're, oscillating, huge volatility, everything's turning to shit. One day I think gold is gonna bottom, the policymakers are gonna do something, and then I think we will have another strong leg up. I don't know when that's gonna happen, but I already know that from a junior mining perspective, we're already pricing in our Armageddon or close to it, and sure it can go lower, but it's like the risk reward is so obvious. It's like, let's say you sell a company that's close to enterprise value of 0. I mean, who in the right mind could justify that if it's not the worst, company in the world? You can't, because you're not paying for any of the upside. You're not taking any upside risk or downside risk, at least on paper. So it's like you get handed a lot of free money, or there's a lot of free money on the table, but you don't take it because you think it can go lower. But worst case scenario in that, in that scenario, it's like, yes, what's the worst thing that can happen? That the whole sector, which is at fire sale prices, sell for fire sale prices, or even, bigger fire sale price forever. But if something good happens within the next, 3 years, if they go from free to not free to even expensive, that's going to be a huge windfall for anyone. And that happens every friggin' time, unless we're not going to have a mining sector anymore. I don't think that's going to happen. So it's like the risks are increasingly, they're already absurdly to the upside, and they're becoming more absurd by the day. So who cares if there's more downside? I mean, would you complain about this move here? But let's say you're selling because you think it can go down here, so we take this kind of route instead, down here and up there. I mean, who cares? This is enough. This is more than enough. This is probably more than enough. This might be more than enough. So now we're just, sitting down here and trying to flip pennies when the big move is like, dollars. So it's like, hey, there's no problem. The only person that's gonna mess things up, it's us, because almost nobody beats a passive index. So it means that our decision making is poor, worse than the marginal buyer and seller. So it's like, let's start doing some good decisions. And furthermore, it's like you should always have the physical side of things, set already. So I see it as I have my physical gold and silver as a hedge to my risk capital, which is deployed in gold and silver miners, and copper miners, and some lithium, nickel, etc. So if everything turns to shit, my gold and silver will probably be invaluable. If the mining sector does not go away forever, I'm gonna make a lot of my gold and silver and copper juniors, etc. So it's like I see myself as having put myself up for a position where I, pretty much can't fail, or as close to possible as not being able to lose. Because again, if the world turns to shit and every fiat money becomes worthless, your gold and silver, physical gold and silver, will go up a lot in value. So you're gonna be better off than anyone else anyway, especially any bondholders, and that's trillions of dollars. If the mining sector doesn't disappear, you'll probably make a lot of money on the miners and the physical stuff. So I don't, if again, that leaves me kind of, what's it called? Let's just say I don't really care what path we take, because okay, if things just keeps getting worse and worse, we're gonna get closer to some big policy shift or something catastrophic happens, and then gold and silver is going to take the spotlight again. If things turn for the better, whatever, someday somebody will dare to buy one of these free juniors, and they'll go up, and at some point they'll form a trend, and uh, uh, that's going to just get more people to buy, etc. So it's like any scenario from here on out. It's like if you buy cheap enough, if you buy something for free, the risks are just to the upside. It's just a matter of which way we actually, go. Uh, so this is a luxury problem. I'm not in Tesla or the broader markets or any overvalued tech sector and just praying that they won't go down to fair value. I'm just in the junior sector. I'm just waiting for them to get even close to fair value, and fair value is higher. I mean, that's the kind of risk reward I like. They don't need an excuse really to go up. It's just people are typically not rational, especially at extremes. Thanks for listening. Assume I'm biased when I talk about, well, anything. Especially junior companies I own. I own all companies mentioned here, and yeah, some are banner sponsor. I think everyone I talked about is banner sponsor, not Western Alaska. But it's like, again, I've been asked about Novo. It's like, what, they have 75 million in cash. Market cap is around 100 million. They haven't closed the second tranche of the Sprott sale of Newfound Gold shares. So I'm kind of waiting for that, see what pans out there, because Newfound Gold is down a bit. But it's like, is this expensive? No. Do I keep Novo in the hodl portfolios? Yes. Am I plowing in right now? No, I'm not, because I don't know really what the path forward will be. So I'm more uncertain about the path forward for Novo than I've ever been. But at the same time, it's so cheap that I can't really, sell, because I get so much stuff for free, even though they have a burn rate, etc. But they're still working. I mean, they're working on the permits, they're working on the sulfides, which could be a lot better. So who knows? Maybe 2 years from now, gold will be a lot higher. Cost inflation in Australia won't be as bad. Maybe they have their permits, etc. Maybe they put the Venus Creek sulfides into production. Maybe they have a discovery or two, because they're going to be drilling for battery metals and hemi targets, and they're going to continue drilling around the Malmesbury as well. So I just look at what I'm paying for everything, and I don't think I'm paying that much. But at the same time, that goes for 40, 50 juniors. So it's certainly not like Novo is the only one that's cheap out there. So that's why it's like I'm spreading my bets, if you know what I mean. Thanks for listening. Bye.